Global law and global business go hand in hand, but never seem to keep pace with each other. The importance on the global stage of developing and developed nations waxes and wanes, while consumption and interconnectedness steadily increase. All the while, laws and regulations change incessantly, requiring businesses to stay nimble. But how do we make sense of it all? Welcome to Global Law and Business, hosted by Harris Bricken's International Business Attorneys. I'm Fred Rocafort.
And I'm Jonathan Bench. Every week, we take a targeted look at legal and economic developments in locales around the world as we try to decipher global trends in law and business with the help of international experts. We cover continents, countries, regimes, governance, finance, legal developments, and whatever is trending on Twitter. We cover the important, the seemingly unimportant, the relatively simple, and the complex.
We hope you enjoyed today's podcast. Please connect with us on social media to comment and suggest future topics and guests.
Uday Garg founded Mandala Capital in 2008 and has since been dedicated exclusively to developing the business with a focus on the food and agribusiness sector. Since the firm's inception, he has been involved in all areas of the business and was instrumental in developing its strategy and vision, as well as raising the current funds under management. Uday sits on the board of portfolio companies and manages the relationships with the firm's partners and stockholders. Prior to Mandala Capital, Uday worked at Ultima Partners in London, focusing on private investments in global emerging markets across sectors, including agribusiness. He began his career in the investment banking division of Deutsche Bank, New York, followed by portfolio manager roles at Amaranth Advisors in Connecticut and Duet Group in London. He holds a BS in economics from the Wharton School of the University of Pennsylvania with a concentration in finance. Uday, welcome to Harris Bricken's Global Law and Business.
Thanks for having me, guys.
Uday, let's get things started by having you answer a simple question. What is food and agribusiness investing?
I think this is a good question to start with because a lot of people read a lot of interesting stuff about food and agriculture, and maybe the details get lost into what really it means. And I think the simplest way to think about food and agriculture investing is to first try to picture the value chain from inputs all the way to the retail product or the consumer product. So you can take any product. You can take milk. You can take chicken. You can take sugar. So it all starts with the farm, and what goes into the farm is a bunch of inputs. There's a farmer involved and there's land involved. All of those are investable. And then when that's grown, then it gets processed, and all of that is investable, the processing capacity. And then it goes through a logistics system, and then it gets finished into a final product, and that's an investable product. If you break down the value chain quite simply in the food and agri space, you have upstream, midstream, downstream. When we speak to people, investors especially, we try to relate it to oil and gas, even though it's a little bit more complex, but people tend to know the oil and gas industry a lot better. And so if you look at upstream, midstream, downstream, and break down the entire chain into these three buckets, it makes it a little bit easier to understand where the different economics and value chains are. The other important way to think about food and agri is that every product has a different upstream, midstream, downstream, or different value chain. And just to complicate it further, different countries and different geographies have different value chains for different products. So maybe an example would help. If you take the dairy industry in the US, that's a very integrated industry, which means you have integration from dairy farmers all the way to the final product. So when you buy milk off the shelf, the company selling you that milk product is sourcing straight from the farm and handling the product all the way through. Whereas if you looked at the dairy business in a place like India, actually the farmer is completely independent. The processor is sometimes also completely independent. And then the company selling you the milk is just a branded company marketing the product. And so I think just to summarize, understanding the entire value chain, upstream, midstream, downstream, making sure there is an appreciation for different geographies and different value chains and how they behave. And once sort of that is well understood, only then can people start thinking about, okay, where do I want to be in this value chain? Where can I maximize my return?
So you are currently based in Singapore, is that right?
That's right.
And so your focus, Mandala, at least your focus within Mandala is in Southeast Asia. Do you have people spread around the region? Or where does everyone sit? And does your focus differ from others within the group?
So we focus on India and Southeast Asia. The investing team is really split into a core investment team, which is guys with investing experience in finance, and then an operating team, or what we call sector specialists. And the sector specialists are guys with 20, 30 years of operating experience in companies. And while our investment team tends to be sitting together in Singapore and Mumbai, the sector specialist team is much more spread out and more in country. We've got sector specialists in Philippines, in Indonesia, in India, in Vietnam. And so they help us more on the ground, post investment, or even in looking for deals.
And so why did you decide to invest in food and agri? And then why particularly in India and Southeast Asia? How does that region compare with the rest of the world? I mean, I know just from a straight human capital standpoint and consumer standpoint, I mean, that's a massive part of the world's population. It's a big gravity center. So I would think that, intellectually I can figure out some reasons why, but I'd love to hear it from your point of view.
I think it's quite basic in some ways. Just to keep it simple, I think of it as supply-demand and supply-demand imbalances. If you look at demand, which is what you alluded to, which I think most people know, there's the biggest population in that region. If you combine India, Southeast Asia, you're more than a third of the population. Think you've got rising GDP per capita, you've got big middle class, you've got a huge number of young people. So there's no doubt that the demand in that region is tremendous and going to keep growing. And maybe the real detail point there is that the data has shown that when GDP per capita crosses certain thresholds, and $2,000 per capita is one of the thresholds, you see a real exponential spike in things like protein consumption, reduced carbohydrate consumption, more focus on health and nutrition, and so on and so forth. And so that demand spike is really going to be significant. And you kind of saw that in China if you look back 20 years ago. So the demand side is one. I think the supply side is one that is not well understood at all by most people. And part of it is because a country like India would consume today most of the food that it's actually producing. But to give you a sense of supply, then just looking at India alone, India is a top 3 producer of most fruits and vegetables in the world. So it's about 15 to 20% of the world's fruits and vegetables are grown in India. It's a top 3 producer of rice, wheat, soy, cotton, sugar. It's number 2 in sugarcane. So you can it's number 1 in dairy. It's got the largest coastline for seafood. So it's this massive powerhouse of food production, but exports almost nothing because it's all consumed locally. And then we get to the supply-demand imbalance. So despite being such a big producer and such a big consumer, it's also one of the most inefficient producers of food. Some of this translates also into Southeast Asia, especially places like Vietnam and Philippines. And so the inefficiency is down to low productivity. So there's people that are not using the latest technology in seeds and fertilizers and irrigation and so on, and in wastage. So poor infrastructure leads to huge amount of wastage. So in India, 30% of all fresh food is wasted just because of poor infrastructure, which is tremendous given how big the supply is. So if you take some of those very high level data points, this becomes really compelling as a theme. And then I would just, add maybe there's layers of sort of, decision making, why someone would do this. And maybe just to go one layer deeper is the sector remains largely in private hands across India and Southeast Asia. Whereas if you looked at some of the more developed economies, you could name some of the big ag guys, right? Everyone kind of knows the, Archer Daniels and the Bunges and maybe even the Nestle's, which are integrated backward. But if you look at India, Southeast Asia, you'd be hard pressed to name more than 1 or 2 companies that are really dominating in the agri space. And again, you look at the China story and how you've got out of the top 10 global agri companies now, China has 3 or 4 in them. They're one of the largest feed manufacturers now. They bought Tyson, as you know, in the US, big poultry business. And they bought Syngenta, Chinese company bought Syngenta, which is a big seed company. So I do think, maybe it's more of a passion that we feel in India and Southeast Asia. We want to help find and create the next sort of Nestle's and the next champions in the food and agri space.
And you have some family history in agribusiness, right?
That's right.
Was it your grandfather who had a prominent seed company in India? That's
right. And the seed company is still around, and it's now, expanded internationally as well. And it's being managed by my cousins who are, third generation. And, it's an important point because really my grandfather, when he founded the business, he founded it with certain principles and certain goals. Profit was not the only motive. And so he did it to really help the farmers and to solve some real problems. That business is, a family business. So I've seen how it's developed. That business took in Monsanto as a minority shareholder, I think almost 20 years ago. And sort of just being around all of that has really been helpful for us at Mandala because essentially we're doing similar stuff. We're working with family businesses. We're coming in as an outside investor, mostly US investor-backed investor. So it's really been great from different perspectives, right? To help understand food and agri, to help understand, family businesses and what they go through, especially second, third generations running these businesses. And then just generally getting a good feel for the sector and how to invest.
So this is actually a great segue into Mandala's own strategies for investing. What are the guiding principles that it has? I mean, clearly there is an influence that this family history has, but it would be perhaps you can flesh that out a little bit. How exactly does that background and that experience translate into current objectives?
So, our strategy and our approach to investing is in some ways constantly evolving. And so every time we sit down and put our strategy on paper, I feel, we tweak it constantly because we get new information, we learn new things. And so really we call it constant evolution in our strategy. We have a playbook. Maybe that's the simplest way to talk about our strategy. And there's 4 key tenets to the playbook. The first is thesis development. And I think we touched on some of that earlier in the call, where we talk about, what is a big thesis that we think we want to go after. So let's say something like productivity. So we think, anything that increases productivity, increases efficiency on the farm is a big play. And that would make sense given the supply demand imbalance and all of that stuff. So there's a huge opportunity in finding the right themes. And for that, we really use a lot of our network, our expertise, to do a lot of research to understand where the big themes are. The second part of our playbook is deal creation. And then the third is deal structure. And they're both kind of linked. I think the deal creation part is unique because we spend a lot of time with the underlying companies before we invest to understand, what their drivers are, what their motivations are, and to really create a deal when there might not be a deal in the first place. So we're not getting deals shown to us, by bankers on a platter. These are usually deals we have worked on for 2 years, maybe even more, getting the relationship built with the seller before we can actually go and structure the deal. And then on the deal structuring part, this is something we've been quite innovative in that even though it's a traditional private equity fund, we do structure our deals with a lot of quasi equity, so debt-like feature with a lot of ratchets and different sort of structures that protect us on the downside, especially with some volatility that agriculture can experience. And maybe at the end of it, we reduce our overall return profile, but then we also reduce our overall risk profile. And that's something that's worked well for us. And then the last step in our playbook is what we call business transformation. And that's really the key and something that's evolved the most, and this is where the sector specialists I mentioned earlier really play a big role, and that is really to what is our key value post investment. And that is, really executing our 90-day plan, executing our long-term strat plan, extracting the maximum value, positioning the company well for an exit. And those are things, especially as we're now further into our second fund, we spend more and more of our time on that. In fact, our team today is bigger on the sector specialist side than it is on the investment team side. That's a very, very brief overview of the strategy. I think there's maybe a couple more components. We've got, a Mandala impact component to this, which is our whole impact effort. We've got Mandala innovations, which is our effort on the Agritech side. And then we've got two more, which become Mandala Analytics and Mandala Network. We hold very selected events, but we hold a few events where we invite different industry leaders to interact, and we bring our portfolio companies together and exchange information so that we can sort of improve overall our network and also how our portfolio companies perform. It's a sort of complex strategy that keeps evolving, and we keep trying to improve it. And ultimately, it's all about enhancing the returns for our investors.
So I do a lot of international work with companies and with investors, structuring deals, and that can be a very emotional thing for companies, right? When someone like you approaches your outside money, your outside expertise, it can be a little daunting, a little intimidating. So how are you received in those situations? Do you find that you have to spend a lot of time developing rapport with the target companies, really building those relationships? Or would you say that your method is to identify companies that really need the capital and need the expertise, and they're happy to have you work with them?
There's no real straight answer. It's a bit of a balancing act, as you probably know. I think it's a combination of maybe my background, family background helps a little bit. I'm a pretty relaxed guy. We don't wear suits and show up in fancy cars when we go meet these guys. We spend a lot of time, are very patient. We really look to help these companies by giving them a lot of advice, even before we've invested. We bring a lot of our sector specialists and have them interact with the different team members so they can see the value that we add. And really, we try to understand, as I mentioned earlier, we try to understand what their issues are, what their motivations are, where they want to go with this thing long term, and then try to see where we can help them. Eventually the deal we propose, is always a win-win. And so, it just takes a while. And I think, and I said we take 2 years really to get a deal, from first meeting to actually getting a deal done. And that's really the time I think, you need to spend with some of these guys before, they can develop mutual respect, so that you can actually get to a deal.
So you mentioned Agritech just a little bit ago. I'm kind of interested in your general thoughts on Agritech, because that's obviously a massive component to rooting out inefficiencies in the sector. So how should investors think of Agritech investing and opportunities in this sector?
Yeah, it's definitely the number one, area in the food and agri value chain today. And I would say a majority of the money, more than 50% of new capital, is all flowing towards Agritech. So it's a very relevant topic. I feel people should remember that, tech has always been around in agriculture, from, again, going to the value chain and going through the whole value chain from inputs all the way to the retail end. Just think of how much everything has evolved. You've got seed technology, which has, grown by leaps and bounds. The farms are more productive than they ever were. You can look at, tractors, which are, entirely run by GPS and, remoteless or driverless tractors. You've got all kinds of improved fertilizers. You've got better processing capacity. I mean, we own a Tetra Pak facility for one of our companies, and, every few years we double the speed of our machines, right? We can produce double the number of packets. And, along the chain, there's, food science, which has moved a lot. And my point here is just that technology is not a new thing. It's in food and agri. As one more example, look at packaging. I mean, how it's grown by leaps and bounds, right? The innovation in packaging. And this has been happening for 20, 30 years. So I think, first of all, that's my first real comment, is that agri-tech as a whole is not a new area. And that's important to recognize. And then the second is the renewed interest in agri-tech more recently is clearly because of, data, right? So you've got increasing processing speeds, you've got, telecom, wireless telecom technology. So, or now 5G coming up. So all that has made data processing a lot faster, easier, more efficient. And that's driving a new wave of agri-tech investing. So that's important, to also recognize. And then the third point is, what is all this achieving, right? What is the point of all the agri-tech money that's going in? And for me, I break it down into two key areas. Mostly, I'd say, I don't know, it's tough to put a number, but I'd say more than 75% of money into agri-tech today is really going towards productivity or efficiency. And just to explain further, on the productivity side, it's really going into finding ways to improve yield, right? How do you improve what you can produce? So just think of all the agri-tech companies you've heard of, all on-farm technologies like drones and sensors. All of them are really driving what at the end? They have to improve productivity, otherwise the farmer will just not buy it. And then the second is efficiency, which is just reducing costs really, or more from less, right? So you move into a technology that, like we have a sugarcane business that we've invested in, but we're taking the fiber, which was just burned for fuel, and we're producing ethanol from it, right? And then we're producing some other specialty chemicals from it. So that type of technology is also where a lot of money is going. I want to leave it there and keep it quite basic. I think that the cool stuff is probably another session, the cellular meat and all of that stuff. I think there's very little truly disruptive agri-tech, and I would put cellular meat in that. That's really innovative and can be game changing. I would say majority of the agri-tech out there is just focused on productivity and efficiency.
That's fascinating. Yes, we definitely would love to talk with you more about the cellular meat and other innovations you're seeing, like you said, true innovations, in a future time when we can talk again. What are your thoughts on the cannabis sector? I know when we had our initial call to discuss this, I mentioned it to you, and you're in the middle of Southeast Asia, and Fred and I do quite a bit of international work, and we get inquiries quite often, to or from the U.S. And often dealing with Southeast Asia. So what are you seeing? What are you hearing? Do you think it will be as big in Southeast Asia as it is showing to be in Europe and North America? What kind of general thoughts would be great?
Yeah. So, to start with, we've invested in a company in the US called Arcadia Biosciences, which I think is today, the leading CBD seed company. Again, I go back to the value chain. So, if you understand the value chain of CBD and hemp, that makes life a little bit easier to think about where to invest, what's going to happen to it, and so on. And it's quite interesting. Again, this is my opinion, so it could be wrong. But when we look at the value chain, the maximum value today will be with the seed company and with the brand, right? So whoever can come up with a retail product that consumers can associate with and so on. And you can argue that, will that be a new player, or will that be, Pepsi just putting CBD infused Pepsi, or Coke putting CBD infused Coke, right? So that's an interesting area to talk about. But then on the seed side, which is really the basis for the CBD, is some interesting points. So if you look at other crops like soybean, which is the most developed crop, right? You can get the entire, genomic sequence of soybean. It's been, studied every which way. You've got, 3 layers of gene stacking into it. You've got so much work done on it that when you, and you can work with, universities in the US, which have done tons and tons of work. When you look at CBD or, hemp, there is almost no work. In fact, there is no work because it was illegal to do any work, right? So when so Arcadia, for example, and even my own family business, we work with a lot of universities in the US for research, like the big sort of agri universities. And there's no database there for any, any material on what's in there. How do you develop these seed technologies in CBD for CBD enhancement or for hemp? And what we're finding with Arcadia is that Arcadia is able to, through its relationships and being a pretty well-established seed company and seed technology company, is able to really go right to the beginning and start building up this expertise. And the real challenge here, or the real interesting play here, will be to see how quickly do the majors get into this. And if the majors today the majors are not getting into it. So if the Monsanto, Bayer, Syngentas, are not looking into this, who is going to take the lead? And it's got to be a real seed company, right? It can't be guys in their basements who used to grow marijuana, right? And then you have regulation, which is coming in, which expects things to be, really proper. For example, the CBD content and all of this stuff. And it's obviously an evolving regulatory framework as well. So it's maybe I'm not being too coherent because it's an exciting space and there's a lot to cover. But I think the seed guys really hold the key here in terms of transforming the space because they will be able to produce, more consistent varieties through very basic technologies like hybrid, which again is not there. It's all sort of homegrown. And then I don't think the processing guys, which today all the attention is on the processing guys. I don't think the processing guys really have much to offer. It's very commoditized because there's no real technology in that. And the retail guys, are still very small. I mean, everyone's still trying to make their brand. And I'm not an expert on the brand side, so I wonder, if it'll be a new brand or if you're better off just selling CBD to a Coke or a Pepsi, right? And let them go and do their thing. So that's really my feeling on the overall industry. Again, I think it's a much longer discussion. But as it pertains to Southeast Asia, I mean, look, Thailand is very, very keen on this, and there's a lot of a push straight from the government to encourage massive amounts of this, money to come in, technology to come in. I think there is no doubt that there's significant health benefits of CBD. So it's just a matter of time, I feel, before this gets more and more accepted and gets put more and more into, daily products and also medicinal products. And just as a last comment, I mean, with Corona and with stress levels very high, I mean, I think, CBD with its, qualities of, helping with sleep and all of this could really be, it just could really be its time.
Uday, just following up on your comments, you brought up universities, and just as a matter of curiosity, what are some of the leading academic centers when it comes to agriculture? Obviously, there are universities that come to mind, if nothing else, because their names prominently feature the word agriculture. But I'm just wondering if perhaps there are some important players out there that might not be so obvious, just as a matter of general knowledge.
Well, I don't know all the names. I just know some that we've worked with in the past. And I think, on the West Coast, you've got tons, and Berkeley is one where we actually work with closely, and our seed company in Davis, which is in UC Davis, has, we've licensed CRISPR from University of California. So that's a big one. In the East Coast, Cornell is probably the biggest, I think, in the agri space. They've got joint research programs with us, actually. And then all the Midwestern guys, Illinois and so on are very big in agri, and I think that's the more obvious, Corn Belt type of universities. Texas actually does some of it. We've just not worked with them, but they're actually quite advanced on some of their technologies as well and what they produce there in R&D. I think they get huge amounts of funding, a lot of universities, from the government for agri research, and really I think it's some of the best in the world, really.
Let's talk about impact investing. First of all, what is it for our listeners who might not be familiar with the term? And then how does Mandala approach impact investing?
Yeah, so impact investing is just a massive space. I think everyone has a different view on what it means. Maybe the simple way to think about it is, again, from, a pure charity perspective, right? You want to give, $1 to someone to eat. That's impact. And you can sort of keep moving on the curve, making more commercial decisions and maybe lesser and lesser impact, I suppose. and all the way to say like doing a buyout of a cigarette company, right? And then the key is to maybe find a sweet spot where you're getting a commercial return as well as making impact. And then what is the impact you're making, again, is subjective. The United Nations have come up with these SDGs, social development goals, which are really helpful, at least in terms of saying, okay, I'm making an impact on these 1 or 2 SDGs or these 5 SDGs. And the SDGs are things like, improved water or equality or women participation in labor, things like that. And it's very easy to sort of check this out. I think the confusing bit is people like to feel they're making an impact, and investors, especially or fund investors, are quite good at dressing up, or they call it greenwashing, their strategies to make it look like they're doing impact, because really everything you do has some impact. So, real estate companies are saying they're impact investors now because they're building, solar roofs on top of the building. So it's relative. So what does Mandala look at? So first of all, given that we're in food and agri, impact is quite natural. We don't even need to try really. And we're making massive impact across huge number of the SDGs I mentioned. So, because we're more upstream and midstream in the food and agri value chain, we touch farmers, which is all rural, which is mostly women farmers. We touch the environment, we touch water usage, we touch inequality issues and so on. So impact is naturally a big thing for what we do. The area where we differentiate or how we think about it is quite simply scalable and sustainable impact. And what that really means for us is finding companies where our investment is being used to create impact that can be sustained beyond our investment. So really companies that can continue to shine, if you like, after we've gone out of it. And so our investment is just there to help them. But really the impact has to be sustainable. And it comes down to cumulative impact. So if I invest in something, it should not just be a one-time impact, right? So I'm trying to invest in a company that will build something, a factory or a processing plant that will keep giving back, so to keep having impact. So that's the sustainable part of it. And the scalable part of it is we want to make sure that we can make impact over a large scale, over a large number of people, over a big footprint. And that has to do with finding companies that are relatively large. So we don't want to, I think I use this example, maybe it's not that appropriate, but, basket weaving in a small village somewhere is great, but it's just not scalable. It's too small. That's not what we do as a fund. And in both scalable and sustainable impact, it really comes down to finding companies with good business models and good unit economics. And so if the businesses are sound, when we put our money there, the impact that they create is both scalable and sustainable. And that's really what we're after. And then just the last 1 minute on it is we track our impact in a very numerical way. So we have a report that's available on our website, which is, we have proprietary formulas. We actually take our impact, we try to convert it into dollars. So for every dollar invested, what is a dollar impact we're generating? And then we accumulate that dollar impact because that's how it should be. We expect it to be cumulative impact. And we generate an SROI. So you've heard of ROI, which is return on investment. So we generate a social return on investment. And that's kind of what we report to our investors.
Uday, it's been great having you on the show with us. We really appreciate your time, appreciate your insights, and hope that we can see you again on another episode in the future to dig in more in some areas we've mentioned today. We always like to close our episodes with recommendations so that our listeners and Fred and I as well can learn what you've been reading, what you've seen lately, what you recommend, so we can get more information. We can really get a good feel, either in this region or other regions, whatever you think might be really relevant to us today.
So one of the books that I've read recently, and I really recommend it to pretty much everyone I meet, is a book called 40 Chances, Finding Hope in a Hungry World by Howard Buffett. This is Warren Buffett's son, who's actually quite accomplished on his own. I think he was on the board of ADM, on the board of a pivot irrigation business. But it's actually a great book because it really straddles impact, agriculture investing, emerging market investing. And it's really inspiring. It's one of my favorite books in the space, and I would really strongly recommend that.
And Fred, what do you have for us?
I'd like to recommend an excellent piece called A Woman Called Hey. And that's hey as in, hey, how are you? Not it's not a foreign word. But the article does talk about China. It's a sad, at times infuriating, at times uplifting story about a woman who belongs to an ethnic minority group in China who was kidnapped basically to be married to a man in a different province. This is unfortunately a phenomenon that has been around in China for a while and remains to this day. Part of what made this particular story particularly interesting, but also sadder, is the fact that because this woman belonged to an ethnic minority, she didn't really speak Mandarin and was unable to learn it over the years. So that made it harder even for her to contemplate making her way back to her village. But what happened was, over time, once her husband died, her daughter decided to try to help her find her home village. And it's a fascinating story. It was basically a crowdsourced kind of solution where they were talking to people back in the home province, and they were able to narrow down the areas from which this woman had come. I don't want to reveal too much, but it's a great read. Really, one of the best things I've read in a while. The author is Zhang Yue. I don't know what the tones are, so just going to try to keep a neutral opinion there. Translated masterfully by Matt Turner, and that came out on November 28th. So again, A Woman Called Hey. What about you, Jonathan? What can you recommend this week?
My recommendation this week is a Nikkei Asia webinar that they put on a couple of weeks ago called The New Tech Supply Chain. I really like this webinar. It was about an hour and a half long. It had 4 different staff writers who covered technology in Asia, including one based in Vietnam, one based in Taiwan, one based in mainland China. And it really gave a good insight into what it took China to build its impressive supply chain now in high technology, in the last 20 years, and what it would take for competing Asian countries to replace that supply chain, or at least to get up to par where they can, for instance, order a part and get it in a matter of hours or days as opposed to a matter of weeks, which is what we're looking at right now. So I highly recommend that if you are considering relocating some of your supply chain from China to other parts of Asia. Really easy to listen to and quite a good webinar. Well, Uday, we want to thank you again for being with us. We wish you well. Certainly we'll keep track of what you're up to on social media and look forward to catching up with you again.
It's my pleasure. Thanks for listening patiently to me talk. And look forward to catching up.
We hope you enjoyed this week's episode. We look forward to connecting with you on social media to continue discussing developments in global law and business. This podcast was produced by Harris Bricken with executive producer Madeline Williams. Music composed by Stephen Schmidt. Tune in next week for another episode. We'll see you then.